The $6 trillion global insurance industry runs on friction. Behind most policies lies a heavy infrastructure of human adjusters and manual paperwork, designed to manage payouts through slow, subjective review. This lack of cryptographic verification creates a secondary crisis. Without a way to instantly validate physical evidence, fraudulent claims cost the industry $80 billion every year. For the policyholder, the process is often a black box. You submit evidence, but the final decision rests with a human adjuster, whose financial incentives are naturally aligned with the insurer, not the claimant. The current system forces two financially opposing parties to rely on unverified trust, creating a cycle of mutual high costs and systemic distrust. This friction can be removed by shifting the role of the adjuster from a human to a mathematically rigorous AI system capable of adjudicating claims based on raw data. To maintain integrity, this AI must execute inside a strictly isolated, hardware-sealed vault. This ensures the logic cannot be tampered with by an external administrator or the insurance provider themselves. InsurAI is a decentralized protocol built on the zero-G network, designed to implement this specific hardware-secured architecture. Locking the policy rules into smart contracts and running evaluations inside a secure hardware enclave creates a physical, mathematically enforced guarantee for every policyholder. We can see this in practice through the user portal. This screen tracks an active portfolio of parametric coverage plans, including shields for flight delays and gadget warranties. Configuring a policy is an on-chain transaction. A user selects a coverage tier, reviews the premium, and inputs their specific flight or device details to activate the plan in seconds. Once confirmed, the protocol routes these policy details to zero-G storage. The parameters are immediately encrypted using AES 256 GCM, sealing the terms in an immutable state. This transaction record marks the genesis of the policy. The network mints a non-fungible token to represent the contract, providing a public, verifiable record of the agreement's original terms. Because these terms are cryptographically locked at the moment of purchase, the insurance provider no longer has the technical access required to alter the agreement or change the conditions of a payout. When a policyholder experiences a loss, they submit proof through this central upload area, providing a description of the event for the system to analyze. This evidence moves into a Trusted Execution Environment, or TEE, on the zero-G private computer. This enclave acts as a secure processing zone, where data can be evaluated without exposure to the public internet. Inside the enclave, 3 independent AI agents run in parallel. They evaluate the submission for fraud, verify the event parameters against the original contract, and calculate the exact payout amount. The result is shown here. This TEE decision box displays a 94% confidence score, finalized by a unique enclave signature generated by the hardware. Because the evaluation logic executes strictly within this hardware boundary, the result is final. Neither the developers nor the insurers can intervene to block or modify the AI's verdict. The transition to settlement is visible on-chain. These pending claims, CLM9 and CLM10, are tied directly to their respective storage content identifiers and TEE signatures. This transaction record confirms the zero-G chain received the TEE's cryptographic signature and validated it through a smart contract, triggering the financial payout. The scale of this automation is reflected in the Block Explorer. Here, 74 transaction records hit the insurance policy contract. Each row and success marker represents a parametric claim processed entirely by code, bypassing the weeks of manual review usually required by traditional systems. The integrity of the underlying system is similarly verifiable. This log shows the successful deployment and block confirmations for the master contract. This unbroken cryptographic chain, from evidence upload to capital release, automates the high-volume adjudication that typically burdens manual claims processing. For insurance providers, the system offers an unprecedented level of operational transparency. The dashboard tracks the live pool balance and revenue while monitoring the real-time health of the zero-G network components. Providers can analyze the specific loss ratios and revenue metrics for every product line. This data-driven model allows for more precise risk management than traditional human-led departments. The defensive metrics are equally important. In the AI performance logs, we see a 0.3% fraud rate, indicating the specialized agents are successfully filtering out malicious submissions that would otherwise bypass human review. This model allows for a more efficient allocation of capital by aligning the insurer's profitability with the consumer's need for fair, instant payouts. This operational shift is made possible by integrating 3 distinct zero-G layers: storage for data integrity, the private computer for secure adjudication, and the chain for final settlement. For the policyholder, the architecture ensures that the insurer lacks the physical ability to deny a valid payout. For the provider, the cryptographic proof ensures the policyholder cannot manipulate the evidence used to trigger that payout. The architecture shifts the industry toward a model where global risk management is decided by verifiable, hardware-sealed computation.